everyone, welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 12th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, the geopolitical environment, how that impacts the markets with some of my market analysis, and I'm going to do the same thing for you folks out there in these daily market commentaries, but I'm going to go a little bit further and talk about these option strategies that I'm implementing into my portfolio based on the assumptions I come up with my directional assumptions. And for you folks, I've streamlined the process over 25 years of trading and teaching into finding the optimal option strategy for any given assumption. We don't just pick option strategies out of the hat here. What we do is we look at this underlying, see what is going on in and around it, and that will lead us down the path to finding the optimal option strategy given our assumption. All right, so without further ado, let's get on with the economic data, see what's going on in the overall markets, and find some opportunities out there. All right, across the pond, really nothing to speak of, but here in the United States, we did get the NFIB, which is the National Federation of Independent Businesses. It's a small business index. We've been seeing this one just slightly above 100. We pulled back a little bit to 95.9, expected to be 100, and that's not surprising, seeing all of the geopolitical stuff that's going on. Remember, we didn't get the PPP loans out there before the end of the year, basically. It was drug through the summer. It was supposed to come out in maybe August, September, and we did not get that for another several months. So that probably was waning on some of these small businesses that were really struggling, okay? So that's not a real massive surprise that we saw that pull back. We did get a stimulus package, so this number could be a little bit hindsight there. And there's probably going to be another big stimulus coming up as soon as Biden gets in. All right. So JOLTS jobs opening coming in at 6,530,000. Openings expected to be 6,420,000. So a much nicer read on that by over 100,000. That is obviously a good thing. And the economic optimism coming in slightly above 50 at 50.1. That was in line with expectations there. And later on this afternoon or throughout the day, we'll have bond auction results that you can keep an eye on. Rick Santelli, my boy, for that kind of information. All right. Crude oil continues to move higher. It's on marching orders to hit $55 a barrel, I think. And it looks like we are going to at least hit that before we see any type of weakness in crude oil. Then we move over to gold futures. Now, yesterday I was tweeting this out in my Twitter feed. I took a snapshot of it before today's move happening. And as we can see here on the blow up, or right down here at the bottom, is we have a very nice, what you would normally look at for a perfect setup on a rebound. Whenever we get a big candle doji like this, and then a nice candle doji like that, next day I'm expecting to see something like this. That would indicate that we found a little bit of a bottom here. Is that happening at this point? No, because this candle started out green. Today we're seeing that weakness come into the market, and as we can see here, the bottom is almost creating a situation where it looks like we could be seeing, you know, you get the big candle. Let's draw it over here. When you get the big candle coming down, I've got a baseline that I'm looking for this type of scenario here. But now we've got a candle right now because it's rallied up there, made it look like a confirmation. Of course, I'm a little bit early, generally speaking, but then when you get a candle like this, this could signal a continuation to the downside, the way it looks right now if we were to settle right here. Now, a move back up towards those highs, that's going to be the scenario I'm talking about here. If we move towards those highs, that is a bull move. We would expect a confirmation of a bull. And this is a bearish. It's going to be more of a bear pattern. All right, so a little bit early for me. Yes, we could start to see this continue to roll over. My out on this trade, though, that I'll talk about here in a minute, is anything below that line in the sand. Breaking below yesterday's low is going to break this entire pattern. That's where I would pull the ripcord to get out of my gold trade that I'll talk about here in a minute. But at this point, we're kind of keeping an eye in a holding pattern here. Bonds down another point on the day, breaking below the Fibonacci. I thought for sure this double line Fibonacci at 167.17 would hold, and it does not look like that's the case at this point. Of course, we have to look at this chart setup tomorrow after the close today to see if we rally back above that line in the sand. That would again create one of those patterns where it would look like we were finding a little bit of a bottom here. If you're just looking at candlesticks, and a settlement above that Fibonacci would make this whole chart setup look even that much better. I don't have anything going on in bonds at this point. I would like to see interest rates come off. So, you know, my hope is that they do start traveling, and that is only for economic well-being at this point. I think it will help for a little bit longer to have lower interest rates. Now, Dow Jones Industrial Average up 68 points, but we'll see once we start breaking all this stuff down. It feels like a very inside day, especially if we look at the E-mini S&Ps. We can take a look at the NASDAQ. As you can see, it is up 12 points on the day, but again, that could be made up in a matter of moments to go into negative territory. But you can see from yesterday overnight, it is pretty quiet. This chart pattern isn't quite setting up for an inside day as much as we see over there in the E-mini S&Ps. E-mini S&Ps pretty much unchanged, up 9 ticks on the day, but this is what I was talking about. Yes, it feels like a very inside day from the last several days, lining up quite tight along, you know, in this range-bound area that we're seeing. We're also seeing volatility really start to come out across the board here. Not dramatically, but still seeing a little bit of volatility in some of these underlyings finally start to seep out. Now, yesterday, you guys remember me talking about Square a couple of days ago only. I put on a bearish move. Now, it's interesting. I use the same entire paradigm on this strategy for these two trades. So if you guys remember, I tried to get into this trade on the 18th. So on the 17th, we saw this topping pattern right here with this doji. It never got confirmed. I was in obviously a little bit early, as generally speaking, but in this strategy, I went in and bought the March 220 puts in there. Well, obviously the market went against my my trade, and I said if it breaks above this top of the 17th, then that's where I was going to be looking to get out. Well, we can see that that did happen, and rather quickly. So only a day or two later on the 22nd, I decided to bust out of this trade and just pull the ripcord on it. So I did lose money on these March 220 puts that I had bought. Well, we got the sell-off. I was a little bit angry. I'm not going to lie that I got out just a couple of days early, maybe even only a day early, and wasn't able to take advantage of that market move. But I had the other opportunity again on the 8th, which was Friday, to get into this strategy again. Bought those same March 220 puts, this time for $13.30. You can see I got that volatility when it was even lower than back you know, here on the 18th when I got into this trade. Volatility at extreme lows. I talked about that when I put this trade on. The volatility expansion will help me. Well, we got this move. We can see volatility came up. We saw this expansion here in volatility, which would help. You know, we're basically going from this low when I put the trade on, and we did get some volatility expansion there. So that helped. Also, this big drop in this underlying was the directional move. But we can see here that if I got basically what is that? That is basically 12 points of upside in this strategy for just volatility alone. What we're talking about here is that really increased those premiums quite dramatically, because if I look at, I'm just going to go back and look and see what theta is for those specific underlyings, but the theta, or the vega, I mean, is 38 cents. So 10 times 38, we could say that that was $3.80 coming into those premiums just on that expansion and volatility. So when I talk about volatility is the determining factor of these options premiums, that's why. It's because in a matter of one day, we could see a $10 increase in the volatility. That packs up those premiums even further. So I don't need as big of a move to get to my profit target on this kind of strategy. And that's exactly what happened here with this trade. Is I did get the directional move right, but remember, over $3 went into this trade just on that volatility expansion on the market coming off. So I bought those marks, like I said, the 220 puts in there for $13.30. I got out of them yesterday at $19.05. Now today I'm looking at those premiums and they are even a little bit more frothy by another dollar. But I was only in this trade for one day. I was very close to 50% increase in my premium to get to that max profit. So I decided to get out of that trade maybe a little bit early, but I'm not disappointed in the fact that I did get out of that for a nice profit. And it was just a couple of dimes away from being 50% increase in my max profit. It would have been $19.50. So I left 40 cents on the table to get out. And you know, one could say, yes, I left a little bit more on if I would have, or on the table had I waited till today, but nothing is for sure other than the money that I could collect at the time of making that decision. All right, so I'm happy with that. All right, gold futures. We talked about gold making that rebound and what looked to be a bit of a confirmation this morning. Today, you know, it's changing a little bit, but again, I have my out on this trade, and that is going to be if GLD gold futures break this bottom pattern. So literally what I'm going to be looking at in gold futures is if it breaks below 1817. All right, so that's my target. That's going to be my trigger finger to get out of this trade, is a breakdown in this type of move. Even with this green candle right there, that still would be in that camp of a continuation pattern for the bears. But any settlement above yesterday's high, a settlement above 1856 or right there, would be something I would be considering a confirmation to a bottom here. But I'm already in this trade, so as per usual, a little bit early, went into the March, bought the 175 calls in there for $4.55. All right, so obviously looking for a rebound back to the point of control is really what I'm expecting here. A little bit more of a bounce, and then I'll be out of this trade. But a breakdown below 1856, that is my cue to get out of this specific underlying. And PENN, I've been talking about this. I'm looking to do some covered calls. I might as well look at it because I can see it over there in my portfolio. Another blast off to the upside today, trading 105 today. Now, this is going to be where I was talking about. I want to get in there and sell some calls, covered calls in the last few days here. So I haven't done anything as of right now. And at this point, with only a couple of days to go and it making $5 incremental moves on any given day, I'm thinking I'm going to let this one ride out just a little bit longer before I start looking at some more covered calls. All right, so that's all of what I'm kind of looking at right now. Getting ready for our webinar coming up this week and a couple of other guest spots that I'm going to be doing. So please go over to protraderstrategies.com and sign up for that. Also, you know, if you've enjoyed this content, let me know by giving me a thumbs up. Also, if you have any questions, comments, or anything you would like me to talk about in these webinars, let me know at the bottom here. Give me a comment. I'm going to respond to everybody, all right? I want to make sure everybody's clear of concept and that I am covering the things that you guys are most interested in these daily market commentaries. So please feel free to reach out to me. I'd be happy to go back and forth with you, all right? So if you can't take that, take it easy. Oh, yeah, by the way, make sure you go over our disclaimer as we're an educational company. All right, take care.